Welcome to Financial Buzz Market Weekly. I'm RK Walker here at the New York Stock Exchange, bringing you a review of this week's stock market. Extreme volatility continued this week with multiple days of both huge gains and huge losses. Monday actually started out slow as investors waited for results of the last Fed meeting to be released on Wednesday. On Tuesday, the International Monetary Fund cut its global growth forecast for this year by 0.1% and for next year by 0.2%. Plus, anemic economic reports from Europe contributed to major declines. The Dow Industrials, S&P 500, and NASDAQ all lost more than 1.5%, and the Dow Jones Transportation Index dropped 2.5%. On Wednesday, however, all was forgiven as the Federal Reserve released their minutes for last September's meeting. It showed members greatly concerned with communicating clearly that rate hikes will be dependent on economic data rather than a fixed timetable. With the bond purchasing program ending this month, this gave investors reassurance that interest rates would not immediately rise, and a huge rally ensued, gaining back all of Tuesday's losses and then some. For the S&P 500, a loss of 1.5% on Tuesday, followed the next day by a gain of 1.7%, is an extreme in volatility that markets haven't seen since December of 2011. Thursday got bad again when economists reported Germany is on the verge of a recession, and energy stocks declined significantly as it became apparent that rising global supplies will exceed slowing demand. However, jobless claims for the week ending October 4th were good, showing an increase of just 1,000 to 287,000. Analysts had expected the number to be higher. By the end of the day, the Dow Industrials, S&P 500, and NASDAQ had all declined at least 2%. On Friday, import prices for September fell 0.5% month to month, and export prices fell by 0.2%. Stocks were up on the news and then resumed their downward trend. Now let's take a look at some stocks. Yahoo Inc. announced last weekend that they are close to closing a deal with famous startup Snapchat. Yahoo will invest millions in the mobile messaging company, although there are some doubts as to why this makes sense. Marissa Mayer, Yahoo's CEO, is under intense pressure to revitalize Yahoo and to spend some of the $9 billion made after selling part of its investment in Chinese e-commerce giant Alibaba. Hewlett-Packard started off the week announcing the splitting of the technology company into two separate businesses. HP will be separating its stronger core businesses, computers and printers, from their corporate hardware and services operations. Existing shareholders will be given a stake in both businesses. Investors were happy with the plan, and HP shares rose strongly. Time Warner Inc. shares slipped after they announced that one of their divisions, Turner Broadcasting, will cut 10% of their personnel due to declining television ratings. The job cuts will affect well-known channels such as TNT, TBS, and the Cartoon Network. The city of Atlanta will feel the brunt of the layoffs, with more than 1,000 projected to be cut from the region. The Gap, the popular clothing brand, watched their shares close down sharply after they announced that CEO and chair Glenn Murphy will resign in February after 7 years of service to the company. The Gap has been experiencing disappointing sales, and Murphy thought a new CEO would be better suited to tackle the challenge. This is Financial Buzz Market Weekly. I'm RK Walker, and I'll see you again next week.